side.
Dirty souls of wolves are hauling. Can you hear the voices calling? Do you feel how they are dragging, waiting for a second to push you to your limits, going stronger, feeling better? But do you feel them? Can you hear them say?
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. I'm Van Richards, and this is the daily NASDAQ update. Thank you for joining us today. We're on a mission here to count down the 100 stocks in the NASDAQ that are in the NASDAQ 100. If you join us every day for the next 50 days, we've already gone through this several days. If you join us over the following days, you'll learn about every stock that's in the NASDAQ 100. You'll learn about the earnings of those companies. You'll learn about the valuation of them. You'll learn about the moat. We'll tell you about that in just a little bit. We'll also teach you about what's going on around the world and talk to you about the ESG of these companies, as well as the biblically responsible aspects of some of them. And then we'll also talk about dividends when they have them. So let's get right into it and see what happened around the world today with the markets. Actually, as we see this, I guess I need to put it on the right thing, don't I? All right, here we go. All right, there was a lot of red on the map today, as you can see, but there was no red in the United States. Well, generally speaking, you're going to see that not everything's green here in just a minute. The NASDAQ is hitting records every single day. It's an amazing thing. I have to tell you something here, and this is just an opinion of mine, but from my perspective of looking at what the market's doing, the market's telling me that there's not really going to be very much change over the next couple of months. Now, what do I mean by that? What I mean is from an administrative standpoint, from a political standpoint. A lot of you may be thinking that there is going to be change in the White House. I don't think so. And this is why I don't think so. You can disagree with me if you want to, and you can count me down and call me up and send me emails to tell me I was wrong after the fact. But Wall Street and every publicly owned company right now, a lot of them, the big ones especially, are partying like it's never going to end. If they thought that there was going to be a change, there would be a bigger change in the valuation going down. The reason is the potential for higher taxes would weigh on earnings significantly, and people would be taking profits. But they're not. They're partying like it's 1999, and we've got Prince out there singing the song and to keep us all happy. But the idea is the market's still going up. And it was amazing to me, at least. I don't think there's any good reason for it, but it's just happening. The jobless claims were higher. You would have thought higher jobless claims, well, that will push the market down. Nope, didn't happen. Continued to go up. Everybody is not paying attention to what's going on outside. Now, we could also look at it from the other side and say that there's a long time to go in between here and November. But anyhow, let's move on and talk a little bit more about what happened in the markets today. And as I mentioned, everything was not green. You saw all of the indexes, the major indexes were up. But that's primarily growth investments. When you look at the value investments, there are still some investments, some stocks that are losing value. So not everything is green. If we go on a trip around the world, we can see the European indexes were down, that were led by the FTSE 100 that was down 1.61%. The European economies are starving for more stimulus from their governments. And we'll have to wait to see if that happens. Same thing that we're waiting to see what happens here in the United States. The Asian markets are troubled a lot by what's going on with the United States. We impact their economies a lot, and I think that that's going to weigh down what's going to be going on And as a country, from a trade perspective, we can use that to our advantage. But if we look at what's happening on the northern side, that is in Canada, the markets were up just a little bit. The Toronto Exchange, the S&P Composite in Toronto was up a little bit, so it was in the green today. Okay, the two companies that we are going to talk about today, these are our feature companies, Biogen and Booking Holdings. So let's get right to that. All right, if we look at what happened in the market today and we take these two companies and throw them into a graph with the NASDAQ 100, you can get a good idea of how the day went. If we look at the green, as you see the dancing cursor, as I like to call it, the green is going to be the NASDAQ 100. The red is going to be Booking.com. It's called Booking Holdings, but we'll call it Booking.com since that's probably what most people are familiar with it from that standpoint. And then also, Biogen was down on the day, and it was the blue line. There's some interesting news that's happening on Biogen that I think that you'll find appealing, especially if you're interested in medical technology stocks. Let's take this back and look at it from the standpoint of the last 6 months. And if we go and we compare what happened a long time ago, it seems like, gosh, 6 months doesn't seem that long ago, but it was. When we go back and we look at what happened in between February and March, and the market fell, and then here's where we are today. Now, it's interesting, these two different companies, one is a pharmaceutical company and one is a travel company. The travel company, Booking.com, had a hard time, and it still has a hard time going forward because there's not as many people that are booking vacations, but they're not anticipating that that's going to last. I made a video earlier about how to invest during a recession, and part of my recommendation was to shed some of these stocks that are not favoring well from the coronavirus pandemic. But what we're seeing is that there are companies that are thriving, there are companies that are stabilizing, and there are companies that are losing. The ones that are losing, the losers are losing faster, those who are gaining faster, and those who are stable are just hanging on by their teeth. And that's the case, I believe, with Bookings.com. They're anticipating that there's going to be a big pickup in travel, especially international travel, once the coronavirus vaccines are created and issued. But that is an unexpected thing. If we look at how they ended up today, Biogen was down about a full percent. Now, Biogen, is a pharmaceutical maker, but they're a specialty drug maker. And as a specialty drug maker, they have a unique market. And one of the biggest things to hit Biogen and just about any other pharmaceutical company is going to be a new Alzheimer's drug called aducanumab. Now, if this drug works, which actually, if we look at it in the trials, it has had good results. It's been brought up before the FDA for another review, and it was actually brought up by the FDA because they thought that it was warranted. It wasn't brought about by Biogen pushing it through, and that's going to be coming up pretty soon here. If this drug is approved in 2020, even into 2021, this will be the first Alzheimer's drug to hit the market in the last 17 years. This will be a significant game changer, not only in the disease in itself, but for the company Biogen, it'll make a big impact on their valuation. But one thing to consider, though, with Biogen is that the Alzheimer's drug is not the only thing out there that they have on the market. They have a lot of other drugs. Their primary emphasis is in multiple sclerosis treatment and also in arthritis. But you'll see that they have a wide variety of companies that they deal with also. You'll find that Roche has been a company that they've dealt with, and they have other partnerships with companies that has helped them to perpetuate forward. Now, I put my picture of the castle up here again, and why is that? That's because we're going to talk about the moat of this company. What's a moat? If you've joined us in days past, you know what a moat is, but let me remind you. company's moat is their profitability. It's the barrier between them and their competition. If a company has a wide moat, then they have a good margin in profitability. If they have a narrow moat, or in some cases no moat at all, basically competition can overcome them pretty well and take over their market share. Now, when we look at Biogen, Biogen is not unique in the fact that they're the only ones creating the type of drugs that they are, but they do have a wide moat, and the wide moats there basically because of some of the advantages that they have over other companies. As you can see here, yes, they are a specialty drug manufacturer, a specialty drug pharmaceutical company. That means that they're focusing on specific neurologic type drugs. Yes, they are coming up with something that's going to be new in the Alzheimer's arena, but they have an established market in the treatment of multiple sclerosis and a established foothold in the treatment of arthritis also. They've done some collaboration with Roche in oncology, so they have a good partnership with other companies. They're not isolated, and that's the reason why that we gave them, and when I say we, I'm going to actually point toward Morningstar because my research comes from Morningstar, partnered with the strong research and development that we're talking about with the Alzheimer's drug. Morningstar gives them a wide moat. They have a good potential for profitability. As we go forward, and we see actually what happened with this over the past 6 months, it's interesting because when we look at this drug manufacturer, this is what happened in August when they announced the Alzheimer's drug. We saw about a 9% jump in value. But this is a lesson that you need to learn about pharmaceutical companies. They live and die in value based on announcements and progressions of new drugs and the acceptance that they are in treatment. If we go back a few months and we look at it from the standpoint of, I believe this was actually in about April. Forgive me if I'm wrong, I don't remember the exact date, but you can see that we saw a pretty big drop here of about 12%. And it's because that there was some speculation on whether the Alzheimer's drug was actually going to be able to come to market in 2020. So it lost its value. Then all of a sudden it turns back around, and this is where we are today. And it's also lost some value from the standpoint there too. Now, the big question mark is, the anticipation of the drug has a big impact on the value of the stock. The company itself, as you can see here from the Motley Fool report, the profitability of the company is not bad. It's just that the public's perception of the impact of the Alzheimer's drug on the valuation of the stock will have a big impact on it going forward. When we look at the fair market value, let me make this just a little bit bigger for you if you're looking at this on your phone, and you'll be able to see that Morningstar rates Biogen as a 4-star company. Now, remember, when we talk about 4 stars, this is not like we're talking about a hotel where we have great service. A 4-star company with Morningstar means they have better potential, and they're really more of a value stock in the realm of companies in itself. When you saw the numbers previously, and we talked about that there was not all green on the market, you saw the red that was listed there. Those were from actually value companies. Value companies are companies that are trading closer to the book value, the actual valuation of the companies. Growth companies, let's take an example of Tesla and of Apple. Those are, I would call them supercharged companies when it comes to growth because they're trading far above what their book value is. So you'll call them growth companies. Now, you may feel that value companies, value investments are out of vogue to some degree. And if we look at it from a recent history standpoint, they've been down, but I would not count them out. I think that if you're looking at stocks on an individual basis, that you do need to take into consideration the valuation and the volatility that's there. Now, when we look at Biogen, what Morningstar is saying about Biogen is this. They're saying that it is a fair value of $389 per share. They closed today at $277. So they're actually trading under what their estimated value is. Why is that? Well, I think that if you think about it for a moment about the Alzheimer's drug that has the potential to be released in the next year, that could have a big impact on value. And if you're looking for an investment with a lot more potential, then Biogen in the shorter term is probably a better bet. But I don't want you to get the idea that I'm telling you stock recommendations. I'm not. I'm trying to educate you on how stocks work so that you can go out and make your own decisions from that standpoint. And some of you may be asking yourself this question. You may be saying, okay, this is called the Retirement Learning Lab. The point of the company is to help you to retire without running out of money. And here we are talking about individual stocks. Why the heck are we doing that? The point is that there are some stocks that you might want to exclude. Because you're retired doesn't mean that you're going to be out of stocks. If you use a strategy that I recommend to a lot of clients, which is called bucketing. Bucketing is going to be the idea where we're taking money and setting aside for future time periods. Let's say, for example, that you're retiring today. You would probably estimate that you might be retired for at least 30 years, maybe more if you have a long family history. So you may want to be investing money for that 20 to 30 year time period. That's that 20 to 30 year bucket. So stocks have a very important place in that time period because 20 years is a long time and there's still plenty of time if you can tolerate the idea of the market. If you can tolerate the idea of the market, stocks do have a place in retirees' markets in their investments. But let's get back over here just a minute and keep talking about some of these different stocks. Now, one thing I do want to tell you about Biogen is we talk about retirement income here a lot because that's important if you're a retiree. You got to have some income. That's the whole idea. Savings, not the whole thing that's out there. If you have money for retirement, you have to have some sort of income that's available. So dividends are a big part. Go past Biogen if you're looking for dividend stocks. We talked yesterday about other dividend stocks. You can go back and look at that video if you want to, but Biogen's not a candidate. However, if we go up to bookings.com, yes, the actual name of the company is called Bookings Holdings, Inc. They were up for the day. Now, they're another company that does not have a dividend. We'll highlight that in just a moment, but I did want to, since I kind of gave you that lead into that. But the idea is they don't have a dividend, but there's some potential here. This is one of those companies that if you listen to a video that I did earlier about investing during the coronavirus pandemic, the idea is that there are some companies that have potential because of what may be happening. And the way that they will be able to make it is if they're able to hold on financially. Now, there were companies out there like Hertz and JCPenney and a myriad of other companies that have basically filed bankruptcy because they couldn't hold on. But when we look at bookings.com, they're actually holding on pretty well. And even in the spite of what's been happening in the world and people aren't traveling places, bookings.com has actually been holding its own. Now, remember, we talked about moats just a few minutes ago. Remember what a moat is? Yes, remember, a moat is the profitability of a company. And if you have a wide moat, like Biogen, that you've got a big barrier between you and the competition. However, that is not the case when we talk about bookings.com. Bookings.com does not have a wide moat. Bookings.com has a lot of competition. If you think of Expedia, that's a competitor with bookings.com. Additionally, if you think of what's happening with Airbnb, that's competition too. You might be saying, hey, but Airbnb is not a publicly traded company, not yet, but they have confidentially filed for a initial public holding offering, an IPO. So they're in the mix. They're going to be competing for the same type of customers that bookings.com is. Now, one of the difference though between bookings.com and Airbnb is that bookings.com is mainly depending upon a network of hotels, where Airbnb may be depending upon something else. So there is a little bit of difference there. Another thing also is that bookings.com does have a good reputation. They have a good network. So as far as a stock goes, they have a narrow moat. They don't have the big barrier between their competition, but they do have the opportunity to hold on to competitors in that itself. But let's look a little bit further at the company's valuation. This is an expensive stock if you look at it on an individual basis. It closed today at 1,768.69. Morningstar is projecting bookings.com at 1,870. Now, that may be true because the coronavirus basically it depressed the price of the stock, so it's possible it could be going up. We'll just have to wait to see what happens. Let's take a look at what's happened over the past 3 months. If you follow the dancing cursor, you see here what happened when the coronavirus pandemic crash struck, and actually bookings.com did not fare very well. However, it has started to climb, and we've seen it doing okay. Now, when we look at it over the last 6 months, let me back up here just a minute. This is the crash, and this is where we are now. Now, you see two lines on here. The green line that you're seeing is the NASDAQ 100. The NASDAQ 100, remembers the 100 largest companies in the NASDAQ. There's about 3,500 of them. And with bookings.com, they languished basically because people weren't traveling, but things have been picking up and there is some potential from that standpoint. And that's why Morningstar is rating them as undervalued. Again, remember that they have no dividend. So if you're a retiree looking for dividends, you want to go elsewhere. Now, sometimes we can look at companies and we can look at the insiders of these companies and get an understanding of what's going on, because we would think that maybe some people would think that the insiders have an inside track. Maybe they're selling, as we've seen in previous days with some companies, because their company is overvalued. But when they're undervalued, as with these two companies, the executives of the company have been putting the money where their mouth is. They have more confidence in the company. When we look at bookings.com, we can actually see a lot of green here. In the past 3 months, we've seen buyers and sellers. Buyers have been outnumbering sellers in the last 3, 6, and 12 months. If we go back over to Biogen, the same thing is holding true. Biogen, there are a lot more buyers inside working for Biogen than there are sellers. And that's a big deal when it comes to, in my opinion, I think it's a big deal when judging whether a company is valued or undervalued. Now, when we compare these two companies together, just to kind of wrap this section up, we see why these companies have been rated as undervalued. We have Biogen, which is trading at $277.52, valued at $389, compared to bookings.com, which is trading at $1,768.69, and the fair market values projected by Morningstar at $1,870. All right, let's get to this part. I like this part because we talk about the ESG of these companies, and I think ESG is a significant. Every day I go over the ESG and I throw up on the chart all the different companies in the NASDAQ 100. I just want to quickly recap that for you again if you're new to the show. We take a look at what these companies have been doing from an environmental, a social, and a governance standpoint. Governance is how they're run. Environmental and social are kind of self-explanatory. And we take a look at it from two perspectives. We take a look at it from what I would refer to as a secular perspective, where we're just looking at it from the general morality of these companies. And then we take a quick look at what a company called Inspire rates these companies from a biblically responsible standpoint. And then you can take and do with it what you want from that standpoint. All right, so let's go back over and look at these two companies and see what their ratings are from these rating companies. Now, MSCI, I depend upon them a lot for giving me information on ESG. The reason is because they do a very, very in-depth look at what's going on inside of the companies. They do a lot of research into what the carbon footprint of the company is, what the social involvement of the company is, how involved are they in Black Lives Matter, how involved are they in gender issues. And they take a great look at what's going on from a governance standpoint. If we look at Wirecard, that went bankrupt in the month of June, in just a period of a month, it went from $1 billion star to zip. MSCI was one of the companies that threw up a red flag and said, hey, your governance is not up to par and there could be some problems. Lo and behold, it actually happened. That's one of the reasons why I really, really like MSCI. But with that said, MSCI gives Biogen a pretty good rating. They give it an A rating. They have a few issues going on here and there. And when we look at it from the standpoint of individual little things, MSCI is saying that they're lagging and giving, I guess it's employees, access to healthcare. It could also, I don't think it's employees really. I take that back. I think that it is in making drugs available to the public. You find that a lot of these drugs are very, very expensive, and that may weigh in the social aspects of how this company is viewed. Product safety and quality, we're going to talk about something in just a moment that I think may explain that just a little bit more. Corporate governance and corruption instability is very good. It's stable. Human capital development and actually how they run the company from a carbon footprint standpoint is very good too. But let's move on just a little bit. And I want to talk for a little bit more detail about the biblically responsible scores of these companies that we discuss. And I've been throwing this up here, and I got an email that it said, what does the Inspire score stand for? When I show you a score, it's not very explanatory. Let me briefly tell you what that is. When Inspire looks at these companies and they look at it from a biblically responsible standpoint, a Christian standpoint, they look at the customers and how the company treats the customers. They look at it as how they relate with the community. They also look at how they treat their workforce. And then lastly, they look at how they're being good citizens throughout the world. A lot of what we look at from the standpoint of BRI or biblically responsible investing is very similar to what we are looking at when we're looking at ESG or environmental, social, and governance. It's very, very similar. But there are some fine points from that standpoint. When we look at Biogen, Biogen has actually a negative impact rating, an Inspire impact rating. And I don't go into the exact details. If you're really interested in this, you can email me. You can send me an email at van@richardsfinancialplanning.com and say, hey, can you give me some more details on Biogen? And I'll be glad to do that. But I'm not going to go through all the negative aspects of it. I'll just tell you that Inspire rates it as a -12. When they're looking at rating companies, they're going to rate it on a scale from -100, it could be that far, or it could be all the way up to +100. So it's somewhere in between there. A lot of the companies that we've been looking at that are, I would say, are biblically responsible, you want to make sure that they're going to be above 0, obviously. I think that Biogen has a few issues that's going on in there. And I will tell you that if you are vegan, I'm vegan, I'm Christian. I maybe, for an old guy that seems a little different, but that's me. But the idea is Biogen does use animal testing. Now, the companies, if you're looking at pharmaceutical companies, you probably want to avoid any of the pharmaceutical companies if you are a strict vegan and you don't want to be involved in that. Now, if you're looking at it and you have a little different moral aspect look at it, look at a company and ask about the 3 R's, research it and say, what are the 3 R's that are going on with animal testing? So what they're looking at is they're looking at reduction. They're looking at, eliminating animal testing or replacing animal testing when they can. So just look up the 3 R's and you may find that it would fit your standards. If you don't want to be involved in any kind of company that does animal testing, then any of the pharmaceutical companies would be out of reach from that standpoint. So Biogen is one of those companies. Okay. Looking at the MSCI ratings for bookings.com, they rate a little bit lower than Biogen as a triple B. And if we look at some of the issues that they have going on at bookings.com, there's some privacy and data issues that the company needs to address, of course, by MSCI's opinion, as well as carbon emissions. I'm not really sure how a booking company could have carbon emissions, but MSCI's rated them as a laggard in that particular area. As far as being average, they're average in how they manage their labor force and in how that they're governed from that standpoint. So that gives you a little bit of an idea of how that company is viewed. And if we look at it from a biblical standpoint, Inspire rates them as a positive 30. Which is actually pretty good. So bookings.com does rate well with BRI. And that brings us to the end. That's all we have to look at today, folks. And I want to remind you that if you want to find out about what we do at Richard's Financial Planning, go over to the webpage, richardsfinancialplanning.com, and look for the teal color button. And if you want to talk to me about how that I can help you with your retirement planning, click here and set up a time to talk. Actually, if you go to my webpage, you'll find out that there's a lot of different things about how we work with retirees and can help you to take the information that we had today and put it into practice from that standpoint. So, with that in mind, I'll remind you that if you're listening to this on the replay and you have questions, go ahead and enter them into whatever platform that you're listening to it on. If you're listening to this on YouTube, hey, I strongly encourage you to hit the bell, hit the subscribe button so that you get alerted every day when we're on the air, because we're going to bring you information on the top 100 stocks in the NASDAQ. And then we'll see what happens after 50 days and see where we go from there. But we bring you a little bit of information about some stocks, educate you about what they're doing, and educate you about what's going on in the economy, give you a little opinion here and there, and take your questions too. So if you have questions, enter them into whatever platform that you have, and I'll make sure to follow up with you during the week and maybe bring them back up. And not just next week, but actually tomorrow, since tomorrow's Friday, and we'll see what's going on then. Join us tomorrow and stay tuned for a short disclosure, and y'all have a good evening.